Hello everyone and welcome back to the Velocity channel, where this is your bridge to financial freedom. Listen, I know that $60,000, it seems daunting, and so does $10,000, but we're going to show you how, with the cash flow that you have, and we're actually going to use an example here, you can pay off this $60,000 in less than the 6 years that they want you to, okay? Before we get into that, like, share, and subscribe so that everyone around the world knows the power of Velocity Banking. Now, if you have more than just one loan, let's not forget to use CFI, okay? That's going to show you which loan is going to be the most efficient versus the least efficient. Okay, you're going to pay off the least efficient loans first. So if you have multiple loans, multiple auto loans, multiple student loans, multiple mortgages, you want to make sure that you put them through the CFI, which stands for Cash Flow Indicator. This is the formula for that. Okay, you take your loan balance and you divide it by the minimum monthly payment. That's going to show you which loan is the most cash flow sucking and which loan to eliminate first. All right, hope that helps. So now let's go ahead and, as our custom is, let's make sure that you know what these numbers are that we have on the board. This is an auto loan for $60,000 at 10%, and of course they're going to be paying $1,274 each and every month. Now that's already in the budget, okay? But we have a line of credit of $10,000, and guess what? We know what to do with it. Now, this may seem counterintuitive, what I'm going to do next, but I want to share with you that I do understand that most of you, even though you have the lines of credit, you have way more than the 10,000 lines of credit, right? You got 25, 30, 50, and up. You don't want to necessarily freeze up $10,000 every 5 months or so. And that's okay. You know why? Because we're going to do a little strategy called financially allocating wisely. Have you ever heard of that? Yeah, we're going to allocate our finances wisely. What do I mean by that? We're going to take advantage of the calendar. So this is called calendar leveraging. Calendar leveraging. I know that $10,000, even though you have it, even though you don't mind deploying it, you don't want to deploy it every 5 months. So this is what I'm going to do. I'm going to give you the calendar, because this is what you should be paying attention to. Not necessarily the interest rate. Did you know that? The interest rate is not as important as time and balance. Okay? So 1, 2, 3, 4. 1, 2, 3, 4, 5, 6. And then here's 7. All right? 1, 2, 3, 4, 5, 6, 7. All right. Now, you need to understand that time and balance is way more important than the interest rate. What do I mean by that? Well, if you divide up the days here and you're looking to actually pay off this loan sooner rather than later, and you don't want to take the whole 6 years, you don't want to take the whole 5 years it takes to pay off that loan, then what you'll need to take advantage of are the days. 86,400 seconds. Does that mean anything to you? Let's go ahead and write it down. 86,400. That's how many seconds are in a day. And the interest is taking advantage of every one of those seconds. Now, you may not want to put the whole $10,000 towards this principle, but my question is, do you have room for $2,000? Can you put $2,000 towards this principle? Because as time moves on, guess who's getting paid? Guess who's getting and taking advantage of the interest? Not you. but I want it to be you. So let's just say you've got the $5,000 coming in, you've got the $3,000 going out. You do not want to spend the $10,000. You don't want to deploy it. You only want to deploy $2,000 for this month, and that's good, all right? $2,000. Let's see what your $2,000 does to this principal, okay? Let's see how that interest and principal is calculated, because remember, this $1,274 is not going towards this. No way. It's getting split up. So this is what I want to do. I want to make sure that you understand where the split is right off the bat, right when you get the auto loan, versus when you apply $2,000 towards the principal. Let's take a look at it. All right, let's go ahead and look at what that $2,000 did. It went ahead and saved you, right? It jumped you ahead 5 months, right? From month 1, 4 months. It jumped you ahead to month 5, okay? So you're not going to be the $498, $497. No. You jump straight to $474 going towards interest, and there's more, even more, going towards your principal. This is where we want to be, even with that $2,000. Now, look at how much you are saving in interest. Already it's $25, right? Now, if the next month you decide to do the $2,000 towards that principal again, guess what? You're gonna save even more. Why? Because the interest feeds off of what? This number. The principal, okay? The bigger the principal, the bigger the interest, because the principal is the host and the interest is the parasite. We want to get rid of these parasites, okay, as quick as possible. And so, listen, I want to tell you that you can get out of this in about 2.5 years by deploying the $10,000, okay? You can also get out of it in 2.5 years by deploying the $2,000 each and every month. Now, can you do that? Is that possible for you? Now, those with our Money Max account, they already know how to do this. They already have a machine, a software system, making sure that they pay their bills and they know how to pay the bills, so that this is a non-issue for them. They're not even thinking about money anymore because they already know what to do with it. They have a system in place. So this right here is going to be your best friend, right? 86,400 seconds. We gotta make sure that we're doing with them what we need to in order for that $2,000 to exist and to deploy that $2,000 each and every month. Since you don't want to do the whole $10,000, you don't have to, all right? You don't need a line of credit to do velocity banking. You just need the strategy, okay? So it matters on what date and how much you're paying, right? So we're talking about transferring from the checking to the savings, from the savings to the loan to capture the savings, all right? So that we can have this number. This is the goal, all right? That's why we want to pay it off very fast, so we can capture this number here, okay? What would you be able to do with an extra $1,274? Would you want to take a plane trip somewhere? Okay, because when you've already spent the $1,274 for that month, guess what? You can have the $1,274 for next month because it's coming in. Do you see what I'm saying? And so I would rather you use that for yourself versus this amount going towards the bank. Now, what do you think about that? That's just $2,000. Look how much it saved you. And this part is going towards that loan, so that you don't need to be concerned about that loan anymore after the 2.5 years. Does that make sense? So let's go to the calendar, okay? $2,000. How are we going to save the $2,000? We've got bills here. We got bills here. How can we do that? Well, fortunate for you, right? Usually months are divided up into weeks, right? So let's take 2,000 divided by 4, okay? What does that equal? 500, okay? Let's go ahead and divide that up and see if we can't at least get the 500 each week, okay? If we can't make it for that week, let's make it for the next week or the next week, right? Let's say we can only do 300 here, right? Another 300 here, right? Let's not forget this one. We can only do, let's see, 400 here. Well, how much would we need to equal 2,000 for that month? Let's see, 400 plus 300, okay, 700. 700 plus 300, right? That's 1,000. We would need to do the 1,000, right? We need to save up the 1,000, okay? And if you can't do that, it's okay, because you've got to understand what's taking place when you are touching and eradicating the principal. It's affecting the interest. That means this $25 is actually going into your pocket instead of theirs, okay? So just wanted to give you some encouragement there. If you don't want to deploy the $10,000 and you don't want to use that method, you don't have to. We do have calendars, right? And we can divide that money up. We can also, right, if we want to, deploy the 10,000, maybe deploy the 20,000 and capture this cash flow so that we could do with it what we desire. Folks, I hope that helped you out a whole lot. I'm going to go ahead and get out of the way here. I want you to screenshot this. Please attend the webinar this Tuesday. We actually address questions just like this, and we actually run it down for you. We've got a team now. We want you to make sure that you're taking advantage of this instead of the banks taking advantage of you, all right? God bless you. We'll see you in the next video.